You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means it is Wednesday. It is time once again to talk some futures. Yes, it is time for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks have been binging of late. So many new shows hitting the network, including a little over a year and a week ago today. So pretty much our 1 year anniversary. This very show, yes, this show launched pretty much right after Labor Day a year ago, listeners. It's wild to me. I still think of this as, the show that just launched 6 months ago, maybe tops. So kind of wild to me, the little engine that could. Of course, we kicked it off with our good buddy Carly Garner from DeCarly Trading, talking about what the heck is a future, all that other cool stuff, the expiration dates, differences between options and futures, all that kind of fun. So if you're a new listener, and we welcome all you folks all the time, make sure you're going back in the archives and checking out a little bit of that content out there as well. And of course, while you're checking out content, make sure you're hanging out in the Pro, theoptionsinsider.com/pro. That will get this show in your ear holes instantaneously, of course, on the live. Something else I don't mention that often, but another great fun benefit of the Pro is, of course, all the live streams go immediately up there to that live server as well. So let's say you missed something, you couldn't get the live, but of course, maybe you don't want to wait for the beautiful edited podcast to hit the network later that day, or maybe later that week, whenever that show's coming out. You can go get the raw, uncut, fun version, full of all of Dan Passarelli's swears over there. He's not even here, and I'm maligning the poor guy. Over there on the Pro, theoptionsinsider.com/pro. is the place to go get all that cool stuff. Awesome Pro Q&A yesterday with our good buddy, Mr. Scott Nations, talking a lot of things, including why the heck VIX futures are in the toilet. So a lot of futures talk there as well. theoptionsinsider.com/pro. But now it's time, listeners, 1 year in, to bravely venture into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down what the heck is cooking out there, listeners, in the world of futures this week. Is it a wild week? Is it a banger? It's kind of been, we are coming off the dog days of summer, just rolling into September. That's usually the time when people are back at their screens. Markets are slinging a little bit out there again. Starting to see a little bit of volume pick up. And we are starting to see some of that out there in the markets, but it's not exactly banger times. A lot of folks waiting on pins and needles these days for the Fed to do their dance coming up in a little bit, I believe on the 17th. So we'll know a week from now, listeners, on our show what the Fed is up to, even though if you look at the CME Fed Watch, it's telling you pretty much over 100%. Over 100% probability of a rate cut, which is, again, just absolutely wild out there. I don't think I've ever seen it that certain. But c'est la vie, listeners. Out to the trading pit we go. Let's go to the upside first, because why not? What's our top 5 lighting up our tapes to the green this week in the world of futures? We're going to start out in steel, Midwest steel to be precise, 2.7% to the upside this week. Number 4, to the world of rates we go. It's the Ultra T-Bond, up 3.25%. Number 3, it's good old FCOJ, listeners. You know, OJ's kind of been in the toilet all year. But you know what? Getting a little bit of that shine back, a little bit of that luster back, up 3.63%. Almost tied with it this week is coffee, up 3.65%. Starbucks just announcing their numbers. It's got to be challenging. New CEO over there, and he's facing this just enormous explosion in their key input cost. It's got to be fun. Here you go. Here's the key to the executive washroom. And oh, by the way, coffee is exploding. Go have fun. And then number 1, to the upside this week, we're going out to the land of dairy. But you know what, listeners? It's not cash-settled cheese, not even butter. It's not even class 3 milk. None of that fun. Nope. It's Dry Whey. Going all the way up to Dry Whey, up 4.76%. You know, it's kind of maybe a light week when Dry Whey taking the top spot out there. Listeners, all right, to the downside we go. Maybe I spoke too soon, because we don't have any butter to the upside, but we got it to the downside. Number 5, cash-settled butter, off 3.66% this week. Number 4, you know I love to say it, it's a rough week for rough rice, off 3.84%. Number 3, giving back some of its shine, it's platinum, off nearly 4%. Now, again, don't feel too bad. Platinum's still having a good run. Number 2, to the dark side this week, it's ethanol, listeners, off nearly 5%, 4.9%. And kind of stealing the top spot again this week. You know this has an asterisk for me, though. It's our old pal VIX, off nearly 5.5%. A lot of problems with that, not just the fact that VIX as a percent drives a lot of people crazy, but also, if I re-rack that right now, chances are VIX is going to be somewhere else entirely. So a lot going on out there in the world of vol. But you know what? Is there a lot going on out there in the futures market today from a volume perspective? And you know what? The answer is yes. It's actually surprisingly robust. We've been using this barometer lately, listeners, of 300,000. That's what we consider to be a decently active day out there in futures land. 350, now you're talking 400K. That's a bit of a banger, and that's what we got today, listeners. 406,000 contracts to be precise. That's what it cost you to break into the top 10 today. I get you to our old pal, the NASDAQ. The NASDAQ E-mini, 406,000 contracts. Not the micro, none of that stuff. It's just a straight old-fashioned big boy, or what's left of it, NASDAQ contract out there. Again, that shows you NASDAQ has been rocking and rolling over the last few weeks out there today, even if we are looking in the major indices, at least as of right now, kind of mixed out there. NASDAQ off slightly. Good enough for the number 10 spot today. Number 9, to the rates we go. We know there's going to be a lot of rates and some equities in there. The question is, can anything else break into the top 10? Let's find out. Number 9, Ultra 10-year, 421,000 contracts. By the way, we got a healthy mix of December and September on the list. The NASDAQ was September. Now we're going out to DEES for the 10-year, 421,000 contracts. Number 8, listeners, 3-month SOFR, the DEES contract, 436,000 contracts on the tape for that bad boy. Number 7, something else can break into the top 10. And we were just talking about FX and our exotic options and options bootcamp. just the show prior to this. Number 7, it's the old euro. The euro coming in today, Euro USD, the SEP contract, 466,000 contracts on the tape. So euro, interesting stuff out there. A lot of upheaval, obviously, right now in the Eurozone. Be a good time to have a episode of our European market brief. A lot of governmental conflict out there. We saw potentially some scary stuff with some Russian drones flying into NATO airspace in Poland. That's a big no-no. So maybe not a surprise that the euro make it on the list today at number 7. Number 6, back to the rates we go. It's the 2-year DEES contract, 533,000 contracts. Now we jump up again to number 5. It's the S&P Micro, over 750,000 contracts. You know, if it's an equity, it's going to be near dated. And you know, if it's a rate contract, it's going to be longer term. That's pretty much how it breaks down. S&P Micro SEP contract, 759 on the tape. Number 4, to the 5-year note, we go out to December again, 892,000 contracts on the tape today. Number 3, the big dog E-mini. SEP contract, of course, nearly 1 million contracts today, 993. So on a day that looks like a whole heck of a lot of nothing from an underlying movement and index movement perspective, putting up some decent numbers out there today. Number 2, got our old pal, the NASDAQ Micro, 1.07 million. That means the big dog still today. The 10-year note listeners hanging out in December, 1.17 million contracts as of the start of the show. Now, normally, I see a lot of people in the chat saying happy 1-year anniversary. Thank you for that. Yeah, it's wild that this show has been running for a year. It absolutely took me by surprise. So I thought, you know what? It's our 1-year anniversary edition, listeners. Maybe we flip the script out here a little bit this week. Instead of looking at our year-to-date movers and shakers and see how things are lighting it up, let's do all the way back a full calendar year to the start of the show. That will give us a fun sense of how some assets have been shaken up since, of course, the launch of this show, a mere 52 weeks ago, listeners. Let's do a top 10. How about that, listeners? Just for fun. Let's go to the light side first. What's lighting it up to the upside? If you took a guess and said probably a good year to be long some precious metals, you'd be right. Number 10, listeners, up nearly 40% since the launch of our show. It's silver, 39.39% to be precise. Number 9, it's our old pal gold. So gold and silver actually kind of neck and neck, which is interesting. Gold making new all-time highs, but silver no slouch itself right now. Both up nearly 39.5% since we launched the show. So kind of interesting. It seemed like silver was in, a kind of bit of the toilet compared to gold a few months ago. And now both neck and neck, which is interesting. Number 8, since the launch of our show, listeners, it's feeder cattle. 42.5% to the upside. We were just talking about this with Carly not that long ago, how that's tripping up a lot of her clients on the ag side because of all the costs that go into it. Kevin Green was talking about it as well on Twifo. So cattle, even if you don't watch those markets, key in a lot of other commodity markets out there as a result of what's going on in the feeder cattle space. So we see a lot of impact in the ags and everything else. So it's not just cattle junkies who watch this stuff. It actually has a lot of impact on a lot of products. Feeder cattle up 42.5%. for the number 8 spot. Number 7, keeping it in the precious. It's platinum, up 42.75%. Number 6, cocoa. Good year for cocoa, up 43.5%. Now we're jumping to our top 5 for the year. A couple of these are cheats because there's 2 of them in there for each, but nonetheless, you probably can guess a couple of them. But number 5, listen, I was just talking about it, quite a jump between 6 and 5 as well, from 43.5% to 65.6% for number 5. What is it? Yeah, it's coffee. Man, your main input is up nearly 2/3 over the past year. Kind of rough. One might argue maybe you should hedge such things. It's like when the airlines don't hedge their fuel costs and then fuel prices skyrocket on the back of some geopolitical event, and then they complain there's too many speculators out there driving up the prices. Like, maybe you should have hedged. But that's a conversation for another day. All right, let's keep rolling to our top 4, even though really it's a top 2, listeners. A number 4 and 3, take a guess. It's our old pal Ether, up nearly 70% over the past year since we launched our show. Interesting stuff. I'm going to go back in and check that for sure, just because I know our system, for whatever reason, has been having a hard time processing ETH. And then the big dog for the year, keeping it in crypto land, it's Bitcoin, the micro and the big futures, up about 77% since we launched our show. So pretty wild stuff out there. And I'm looking at some other venues just to compare that. And they have ETH up about 83, 84% over the past year. So we're in that ballpark, listeners. Again, depends on the venue, how you're looking at it. Constant maturity versus rolling front month, all that kind of stuff. But interesting stuff for our top 10 on the, let's go to the bottom 10 now, listeners. Can you take a guess? What is just absolutely screwing the pooch over the past year, listeners? I'll give you a couple of seconds to get your guesses in. All right, here we go. Number 10, we're going to the land of dairy. I can't drink it. Maybe you can. Non-fat, dry milk, off nearly 14% since we launched the program, listeners. So I guess on your breakfast table, maybe to flavor your coffee. Your coffee's more expensive, but the milk that goes into it, a little bit cheaper. So maybe that helps a little bit. Number 9, to the world of oats we go, off 14.4%. I've said this many times. Oats and lumber, to me, are the two mystifying products. They move quite a bit, so a lot of underlying action, a lot of volatility, yet for whatever reason, the options market just can't grok to them. So we see no real options flow. On a given week, oats might do 10 contracts. So I don't know what it is about oats that is not conducive to options flow. It's not the underlying. You see how the past year, it's off 14.4% for the number 9 spot. Number 8, out to good old spring wheat, off nearly 15% on the year. Number 7, keeping it in dairy. It's class 3 milk, off 15%, pretty much exactly. Number 6, keeping it in the ags. A lot of ags to the dark side over the past year. It's good old wheat, straightforward wheat, as opposed to number 5, our old pal hard red winter wheat, off, by the way, just the plain old wheat contract, off 19%. Number 5, hard red winter wheat, off nearly 20%. Number 4, hard red spring wheat, off about 20.5%. Then we got our bottom 3. Can you guess them? You should know one of them. We've talked about them quite a bit on the show over the past year and how what a terrible market it is, how you should not go anywhere near it. I'll give you a hint. That's number 1. Number 3, listeners, it's one of the EMs. Which one is it? 3, 2, 1. Yeah, it's lithium, off 21% exactly since we started this here little show. Number 2 to the dark side. Man, it's been a rough year for ags and for dairy. Cash settled butter off 26 2/3%. And the big dog, once again, good old OJ, off 42.5%. So there you go. That's our year's worth of living since we started this fun program. But you know what, listeners? We're not done there. It wouldn't be an anniversary if we didn't feature some of you folks on the show as well. So let's get to it right now. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, welcome to the Futures Free-for-All. By the way, thanks to all of you in the chat who've been sending in your congratulations. You folks are the reason we do this show, after all. People asked me for a long time, can you launch a future show? Can you add some futures content to the mix? And I said no for a long time for a variety of reasons. But you know what? I'm very glad we said yes 1 year ago. And going out here right now to our listeners, we got a question from Noche for All. So night for all? Okay, sure. Why not? Night for everybody. He or she says, can you please explain the whole 60-40 thing with futures? Thanks. All right. Noche for all. We have alluded to this many times over the past year on this show. So what better time to get into this seminal part of the futures biz Then on our 1-year anniversary show, I know it's not the sexiest thing to talk tax treatment on a 1-year anniversary show, but you know what? Sometimes the plumbing is sexy, and that is important. I say all this with the caveat, I am not a CPA or a tax professional, anything along those lines. So by all means, consult your certified tax professional for official advice. This is the unofficial advice of the Futures Rundown 1-year anniversary special. So what are we talking about here? He, or maybe she, Noche for all, refers to it as the 60-40 thing. What are we talking about? 60-40 thing. It's known pretty much as the 60-40 rule. These are also known as 1256 contracts. You probably heard that bandied about quite a bit. What are we talking about? Why are they called that? Well, Section 1256 of the Internal Revenue Code is the exemption that creates this whole, as they put it, 60-40 thing with futures. It allows for special tax treatment for regulated futures contracts, options on certain futures, some index options, and some FX contracts. So what are we talking about? As Noche for all implies, you're going to be taxed differently. Obviously, if you're out there slinging futures, a lot of futures are intraday trades, right? We talked about this many times. There's initial margin, there's intraday margin. Most positions you're closing out, they're being marked at the end of the session. You're not buying and holding futures for a very long term. So in that sense, the notion of long-term capital gains on a futures position is kind of a nonsensical thing. It doesn't really exist. You can't really go out and buy and hold a futures contract for a year. And then if you did, the challenges of doing that, it is still mark to market every day anyway. So it's not really a buy and hold like it is with the stock. So it makes sense in the equity world to incentivize long-term investing. That makes a certain degree of sense. In the futures world, though, it's a very different beast, and these products are very different. So it makes sense to tax them a little bit differently, and also maybe not to penalize people for the structure of the product itself. And that's kind of the incentive behind these 1256 contracts. It was also obviously the result of a lobbying effort by the exchanges. If you can give these products a little bit more favorable tax treatment, then guess what? Volume goes up. So it was definitely in their best interest to get this as well. And to their credit, they got it done. And it still exists to this day. So what are we talking about? 60-40 tax treatment, as the name implies. You buy a futures contract, you sell it out. At the end of the day, you make some money. Traditionally, that would be taxed as a short-term gain because it was literally short-term. Could have been the span of a few hours or even a few minutes. In a 60-40 contract, it's going to be taxed a little bit differently. As the name implies, 60% of that is going to be taxed at your long-term capital gains rate. For right now, this can obviously change. It's going to be the max federal rate, whatever that max federal rate, in this case, is 20%. And then 40% of it, so the rest of that is going to be taxed at whatever your ordinary income rate. And the nice thing about this, you get this split regardless of, again, how long you held this contract. 1 minute, a few days, doesn't matter. As long as you have a 60-40 qualified contract. We'll get to some of those in a second, which contracts qualify for this. Let's go through an example. Very simple example. You come in, you buy an S&P future. You got a great day. You make 10 grand slinging one S&P future. Good for you. So there you go. What happens to that 10 grand now? If it was regular taxation, you'd be taxed the whole thing at your income bracket. Let's say you're in the top bracket, the 37% bracket for income. You'd be taxed at 37%. So obviously you're paying $3,700 of that in tax. So that's obviously not ideal, but because this is an S&P futures contract, guess what? You win the contract lottery. You qualify for 60-40 tax treatment. So let's work it out on that basis, shall we? 60% of that profit is going to be taxed at the long-term rate. In our example, it's the max rate of 20%. So obviously 20% of that $6,000 is going to be $1,200. And then the remaining $4,000 is taxed at your ordinary rate of, in this case, the top bracket, 37%. So that's nearly $1,500, $1,480. So you add all that together, $1,200 plus $1,480. It's $2,680. So you're talking about 27% effective tax rate versus 37%. So you could obviously see the advantage of that. If you're slinging a lot of intraday futures, that's going to add up really quick. And it's a huge incentive to go out and do something like, let's say, an SPX versus some other index products, because you get that favorable tax treatment. So again, if you're out there slinging a lot of futures intraday, this is definitely something you should be aware of. A couple other caveats with these. If you're holding them through the end of the year for whatever reason, they will be marked to market on December 31st. So a little known provision, a little known caveat of the 1256 contracts. They will report a gain or a loss for you as if you sold it on December 31st, even if you actually didn't close the trade. So that's something to bear in mind. They will be marked to market at the end of the year. There's also some nuances with how many years you can carry a Section 1256 loss. It's up to 3 years, but it's only against other similar gains. There's a lot of those nuances. Again, consult with your tax professional for all those nuances. Now let's get into some of the contracts out there. What contracts qualify for this? Well, lucky for you, a lot of the ones you may be interested in trading on the major regulated exchange, and that's what we're going for here. It's also an incentive to trade a regulated futures contract on a regulated exchange you may have heard of, like CME, ICE, CBOE has some futures as well, obviously. These are regulated entities. They have clearing. There's no counterparty risk. There's an incentive there as well to drive you to the regulated stuff versus the, shall we say, more opaque stuff with more counterparty risk. So you're talking your big S&P. We just gave that as the example. Your crude futures, your WTI, your CL, all that good stuff. Gold, a lot of you like the precious metals. Your treasuries, all those futures qualify for 60/40 tax treatment, broad-based stock index options and futures. So you're talking your big S&P 500 options and futures. Now, again, SPX, not SPY. It's not on a future, so that's another incentive to go SPX versus SPY. Just something to bear in mind out there. If you're slinging SPY, you're not getting 60/40 tax treatment. The Russell 2000, the NASDAQ, all those big broad-based index futures and the options on those futures going to give you 60/40 tax treatment out there. There's a few others out there, your FX and other things like that, but those are the big dogs out there. Most of you are going to encounter this through the world of index futures and the options on said futures. So there you go. Noche for all. A great question for our 1-year anniversary show. Hope you all have enjoyed this year of the futures rundown. I know I've certainly enjoyed it. It's been eye-opening to me on many levels, not just learning about some of the nuances of some of the more esoteric and exotic products in the world of futures. I've always been in and around the future space, but I've never been hardcore. So it's been fun for me to become familiarized with, again, some of these more exotic nuances of the world of futures, and also to see the interest you folks have in it, your questions, your comments, your engagement. Thanks to all of you who've downloaded and streamed and subscribed to this show, who've rated it, who've reviewed it. You are the reason it still exists out there, listeners. We appreciate you all. We'll see you back here for another fun year of the Futures Rundown starting next week. And of course, stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.